We just had in our sermon today a comment about the individual who was reluctant. I was asked several months ago to be treasurer, and I said, no, I've already done that for 16 years someplace else. And at the end, the rector and myself, we had a pact. I wouldn't quit if he didn't transfer. And I finally got to a point where I was absolutely furious with about a number of things, and I said, that's it, I'm done. And contrary to what I'm going to say, I'm going to quit. So I went in to see Reverend Diamond, and he said, I needed to talk to you, Warren. And I said, yes, what? And he said, well, I've accepted an appointment at the cathedral in Cincinnati. And I said, well, I was coming in to quit. And I was very reluctant when Roosevelt asked me, he said, you ought to come and be treasurer. And I said, no, I've done there, been that, or been there and done that, whatever. And so here I am today. This is never a perfect activity. Being treasurer and doing budgets, I'm reminded constantly, budgets are not facts, they're opinions about where you would like to go. And they're always subject to change. Unlike Congress, when they don't provide a budget and fund the budget, things go badly. If we didn't have a budget in the church, we'd still have services and everything else would continue to run. It might not run as efficiently, and you might not be aware of your inefficiencies and be looking for ways to improve the ability to accomplish what we're trying to accomplish here at the church. So this is really trying to find the best ways to go forward, to be most efficient and careful with the assets that we've been trusted with, to invest them wisely and not waste them away, if you would. So what I'm looking for today from you is not only just to give you an opportunity to look at the budgets that we've been discussing over the last month or so in various sections of the vestry, but to look at some of the fundamental decisions we've made about issues that affect the statement of incomes and expenses. The key points on the top of the page on the front are those items, and I think those are the elements that ought to take our attention first. Number one is the restricted and reserve funds grew approximately $59,000 this last year. Now, if you turn around and look on the back of the page at the bottom, it says we lost $30,000. So, what was wrong here? This is the problem about financial statements. You need to have a really deep understanding of it, and it's important for me to try to improve the knowledge of all of you as well as the vestry about the decisions that we're dealing with. How much money you have in the bank is different from whether you're spending it faster than you're making it. And we get confused often between the two. If you've got a lot of money in your pocket, you're not paying any attention often to the balance between income and expense. If you don't have any money in your pocket, you don't have any choice but to be focused on income and expense. So we're fortunate to have literally millions of dollars of assets in a collective sense. And we have to be very careful about how we act relative to spending more than we're able to earn or incomes that we're able to produce or create. So that's part of this statement about the restricted and reserve funds grew last year. They haven't grown every year, but some years, a couple years back, they grew $150,000 during the pandemic. Now, one thing, maybe we ought to have COVID every other year, and that would solve all our problems. Investment income will be limited to interest and dividends transfers in and out of the account are neither income nor expense. We previously reported unrealized gains and realized gains on our income statements. Those are funny monies. They're not real money. It's just taking it, say, the balance in an account changed. That's not earnings in itself or an expense in itself. If you transfer the money from your savings account to your bank account, you didn't have more money to spend. Simple enough? Okay. Payroll taxes, which was item number 6100 on the account list, have been adjusted to reflect historical percentages in order to, based upon an assumption about compensation, we made an estimate about what the payroll taxes and benefits would be going forward in this budget activity, rather than looking back and saying, what did we spend last year, kind of thing, is not really relevant in a budget activity. We added a non-current year giving account. Every year we have people in 2024 that are paying pledges for 2023. Was that last year's income or this year's income? What about the income we received in 2023 for 2024? Was that 23 income or was that 24 income? Well, we're going to try and sort that out a little bit because there is a sizable amount of money. There's $10,000, $15,000, $20,000 sometimes difference in those flows at the beginning and the end of the year on accounts like this. And we need to be careful that we understand that number, and that's been reported here this year. It has not been accounted for previously. And compensation for current employees is expected to rise 3% over the 2023 rates. Now, mind you, that doesn't say that somebody's been promised an increase. This is a budget and a plan that the vestry has not approved. This is not my budget. It only becomes important when the vestry has adopted and voted on the budget. That's important to understand. So the fact that I've said 3%, the vestry hasn't voted and approved 3% at this point in time. Last, $35,000 of a restricted gift was identified in 2023, but is yet to be received in 2024. We didn't recognize that income as part of last year, and we will, assuming it's received this year, we will recognize it as 2024 income, and I have included that in the appropriate numbers on the income and expense statement. Pardon? Oh. Oh dear. Well, the printing is a little compressed on 4024, 4050, and 4090. I don't know why that happened with the printer, but those are 12,000, 60,000, and 50,000. The budget number 4050, restricted gifts and bequests, is what I think the 35,000 has been expected in the budget. Any questions about the key points at this point? Interest and dividends are earned money. It's unrealized gains and realized gains. Well, an unrealized gain in an investment account is I bought a stock for $10. It's now worth $12, but I haven't sold it yet. Saying that you've earned $2 when it went up from $10 to $12 is not real. You haven't earned it until you sold it. Calling it an unrealized gain is inappropriate. The monies in our account for investments have relatively insignificant, there's nothing we can do other than change investment advisors and investment strategies to change those numbers. no. It's, uh, yeah, meaning, again, transferring a balance from one account to another account in the parish doesn't change the income. Again, if I take it out of the savings account and putting it in the checking account, I don't really have more money, right? And calling that an income producing activity is misleading, or may be misleading if you don't understand what's actually being said. You can't realize an unrealized gain unless you sell it. Well, you can't sell it for that price because that's what it was last week. What is it now? Yeah, we used to report unrealized and realized gains in investments, and we've taken those off the statement and said, this is a balance sheet issue. Okay. Is that clear? Now? Do you think it's clear for you? Okay. Other questions we might have? Yes. Yes, that's correct. Yes. That's 8 people. Yeah, well, eight positions that are compensated as employees in some form or another. Not all of those are not 8 full-time positions. Some of them are part-time and some of them are full-time. I have declined to publish those numbers. If you feel you need more specific information, I'd be happy to discuss that with you, but I think it's inappropriate and a violation of privacy to be publishing compensation figures for employees of the church. I don't think that serves any purpose other than people's desire to know more about what somebody else is getting paid. You may have a contrary opinion in which you should express that at vestry, and if the vestry wishes to change that policy, they may. But my sense and feel is that that doesn't address our need to understand what needs to be done. Yes, Yetunde. On insurance? Oh, 6120, workers' compensation. Well, we probably had a refund in last year because we probably overpaid the compensation end of the state. Well, what I put in the budget was not based upon the expectation that we were going to have a refund from the state on unemployment next year, because I don't believe we've overpaid this year. I'm based upon what we're currently paying out on a monthly basis now for unemployment for next year is what we put in the budget. Yeah. Or we could have gotten a dividend back. Yeah, but it has nothing to do with expectation of an expense going forward. Yes. For credit card fees, this is the fees that we pay every time you've asked the church to put it on your credit card. Yeah. Yetunde. I think this is an issue that the vestry would need to resolve, whether we adopted that as a policy to ask for an additional contribution to cover a fee. Any other questions about, any other comments about that? I've always been reluctant to give my credit card to somebody that I was doing a contribution for, unless that was the only way I could make it. Yes. I'm sorry, printing and production. Yes. This is an issue that would have to be resolved with the vestry as to policy as to how we do things in the church. If we chose not to print 150 bulletins or 100 bulletins every Sunday, this is the first place I've ever been in 20, 35, 40 years as being an Episcopalian, where we didn't use a blue book and a red book to do Sunday service. Now, maybe that would be unacceptable to a congregation. I have no idea. Yeah. Yeah. If the bulletin was one page rather than 5 sheets of four-sided copy, I think we might have a different cost on reproduction and printing. I do not know. They're so small, it's hardly worth anybody's time. If I thought my time was worth a couple $100, I couldn't spend 2 hours trying to figure out we were getting $400 of tax bill for. I haven't actually seen the tax bill. It's probably for something that is excluded from we're taxed on, that is not considered church property or exempt property, if you would. Yes, Stephen. Well, the campus use income reflects the items that you see above: small groups, FAME, Friday nights, which are no longer existent, Grace Institute, and some other small rentals. Now, Uber is come and gone in this period of time. We're talking about in the general, on the income on the first page, just above where it says campus life income, or line 4100, other income is the top of the group of names. Following that is 41131, building use. Then there's FAME, Friday night meals, Grace Institute. Those are the 4 numbers we budgeted this year. We did not budget other rental income, which is, we're unsure what that is, quite frankly, so I didn't put anything in. One second. And we no longer receiving Uber income, as I understand. Well, we have a rental agreement. We have lease rent agreements with FAME and with Grace Institute. Now, I have estimated those to go up a little bit from what we actually received in 2023. which were marginally about the same, except Grace Institute went up significantly between 22 and 23. We have nothing at this point in time to say something different about those two big rent producers. Because we have no Friday night meals. Okay. Thank you. You know something I didn't know about it. But we haven't had any income there for a couple of years, bottom line. Define what? Well, we used to have meals on Friday nights. And it hasn't happened. They were down before. Go ahead. Okay, no, that's fine. That's the purpose of this meeting, quite frankly. is what are the issues that we should be addressing. We have not allocated anything in the budget at this point in time to fund Friday night meals. However, the magnitude of that in a first year would be almost insignificant. I can't imagine we would we'd have to have a lot of action going to spend $2,000 on that for the year. I would say it's not about money, Utendi. It's about people and a willingness to work on it that you need to have to make it work. We're not failing to do this because we don't have the money to do it. Well, no, I'm not saying that, but those people. Yeah. 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 More questions? You're awful easy. Yes. I think we need a very precise definition of what we consider to be deficit spending. The practical matter is that the investment, the financial value of the total net assets in financial terms for the parish have actually been rising over the last few years. It came down from a peak in 2021 or 22, I'm not sure which year, I think it was 22, excuse me, when we had the highest level of net asset value at the end of the year in investments. And when the market went down in 22, it came down, it's come back up most of that way. But a lot of the difference in our total value is not something to do with the difference between what we're collecting and what we're spending. And the difference between collecting and spending is one thing. If the value of the assets that we have been going up, because those. Income comes in to the church. Now, it goes in one of two big silos, not buckets, but silos. One of them are what we call restricted or reserved funds. Somebody gives you $50,000 to build a rock castle in the middle of the parking lot. You've got $50,000, but you don't have anybody wanting to spend it. Was that income for operating the parish? No. Did you get $50,000 that you haven't spent? Yes. Now, we're talking here today basically about the operational aspects of the church. We're not trying to focus on the issues about whether that reserve fund went up and down. If you look at the bottom of the second page, at the very bottom, there's a line called gross profit. And under the actual year, which is the second column, we had a loss last year of $30,228. That was our operating loss. The number right below it, $59,251, is the amount our reserve and restricted funds went up. Now Well, if you do something that is that the funds can be applied to, then you can buy it. Well, the balance sheets, only if you're going to project them and deal on projections. We're here to deal with the operating expenses of the parish. We have a lot of reserve funds. We have hundreds of thousands of dollars in reserves. That's right. In the same year, we overspent last year $38,000. We also received $59,000 that we put away that we haven't spent yet. Now, when we spend that, there won't be any income to offset it, will there? Ah. Well, that's the difference between all of the operating incomes and all the operating expenses. The change in the 59,000 says people gave us more money and we didn't spend all the money that came in. Well, there were releases from reserves at the same time, yes. Well, the net increase in the 59 was 59,000 net increase in the reserves and restrictions. And we spent down from the previous year 38,000. Now, the total reserves last year went up a little bit. But we overspent the operating budget we approved at this time last year by 38,000. The incomes that we anticipated did not come in. If you look at the top of the first page, we had a budget last year of $463,000 of income, and we only collected $411,000 last year. And we had 270,000 in pledges, but we only collected 252 of that. Now, no, that's simply the difference in the reserves from last year and the reserves this year. We put more money in reserves this year. We didn't get monies they put them in the savings account, they didn't put them in the checking account. Yes, ma'am. Yes, Roosevelt. Speak up a little bit. April? Well, some of that happens, yes, absolutely, yes. Nobody knows how much the roof's going to be. Oh, no, that was done, that was last year, technically. Well, it's been included in the expenses. It was capitalized on the balance sheet. We increased the value of the book value of the building next door by about $50,000 last year. The only fixed asset we had running in the parish was the value of the buildings. There was no value placed on the land because there is a restriction in the deed on the land that denies our ability for it to be sold. That's right, that's this one, not the parish. But we put another $50,000 on the roof. We said the value of that building went up $50,000 as a result. Now, we do not deduct depreciation, but we can recognize the fact that our buildings have a greater value now because of that utilization over the years. Yes. In the not too distant future, the roof on this building is going to need to be replaced. It's probably $100,000 job. It's $50,000 over there. This is another couple stories up. They charge more for that. That's right. That's right. It came out of reserves. We have all the reserves accounts reported in the annual report. Those are all balance sheet items. They'll be in next week's report. We have those capabilities. In fact, when we bought a furnace a few years back, the cost to fund that furnace for this building was financed by the foundation. The loan hasn't been paid off in full yet, but it's another 3 or 4 years it'll be paid off. Yeah, in the middle of the parking lot. Yes.
I need to put you into the microphone.
Go ahead, Sally.
Oh, sorry. Well, I couldn't hear all of that. I think some of that discussion took care of it. It sounded to me like people are using reserves in sort of a general way, the restricted reserves, vestry restricted, donor restricted, and then sometimes reserves is being used as just sort of a catch-all for money that's in essentially a savings account or an investment account. And it sounded to me like there was, some confusion about that. That when, whereas to me it seems the issue is really essentially what you were just coming around to, if I could hear it correctly, the income versus expenditures. And then if we've overspent, then we go to unallocated reserves that are essentially savings, and we don't. And that's what we have been reaching for, I think, in the last few years when we've spent more than we've taken in. But basically, I think your explanations on how to revise things like, pardon me, some of the changes that you've made on unrealized gains. I think if there's still any confusion on the unrealized gains part of it, the other way to look at that is unrealized losses. If the market goes down, then, and that was in the budget, then you take it as a loss, and obviously that isn't right. So I think that was a very, very good and thoughtful thing to do. So, but anyway, I was just concerned about the use of the term reserves but I think that was getting straightened out in that conversation.
Thank you very much, Sally. Yetunde, let me give you an analogy I think that may be helpful. Our operating accounts, the operating profit and loss statement that you're looking at, income and expenses, that is our checking account, okay? Our savings account are the reserves and the restricted funds, okay? We're saying we had a loss in our operating account, our checking account. We had to take money out of the savings and put it in the checking account to pay all the bills. For example, let me give you a big one. For example. Yeah. That's what we're doing. Yeah. Well, you'll have the balance sheet next week with all of the adjustments that might be made between now and then, which will affect the balance sheet. Now, let me give you a real-time example here that affects us directly. On the balance sheet right now, we have a reserve for the curate, which approximately equals the compensation cost that we will incur for the curate. Now, did we hire a curate and are we spending the money? Yes. Did it change the total overall picture of our income and loss? Not really, because we got a whole bunch of money in the savings account, if you would. And to the extent that we need some of that money or part of it, it will be applied against the expenses for the curate for the year. But we didn't produce that. Those things came from somebody outside the church. This year. No. We have received 2 gifts, which essentially pay for a little more than a year of the cost of the curate, all in. Now, that doesn't deal with a second year, right? Is it 2-year or 3-year assignment? Yeah, well, okay. So the gift is, it's the magnitude of 1 year. Well, it's contributed for that particular purpose. Oh, no, it's listed as an expense. It's listed as an expense. Yes. If you look at line number 4090 on the front page, released from restriction, we took it back into income this last year, $47,466 that we created income that we took out of the savings accounts, if you would. Yeah, we realized that is, we put that against income. Yeah, that's right. It's not being taken off restriction to unrestricted. We took it out of restricted and put it in the bank account as cash to spend. Yes. I think that's actually an excellent description. I'm sorry, Charles. I didn't hear you. Yes, you attend. Yes. You didn't read all the things carefully. Okay. Yes. This is off the mark a little bit, but let me ask this. Do we have a marketing plan? Do we have an understanding about the demographics of our congregation, where they live, how old they are, what kinds of incomes they might have as families? Do we know whether those numbers are changing or not? Well, you don't need a marketing company to do it. Well, but it's something that's changing all the time. And if just doing it once is useless, you've got to be following and know what your market is. And if you're doing things and trying to accomplish things where you cannot attract people from, then it's not going to work. This is more about people than it is about money. And if you don't know where your customers are coming from, you're in trouble.
Okay, we are, you know how we are at
55 minutes is what he's saying.
so we're not in 5 minutes, so we need to start wrapping this up. Before we do, there's something that I want to make really clear, and it's more, I just want to be utterly clear. The Cura tomorrow did not cost us anything. It's a 3-year commitment, 3-year term. Each year we get, and we have something wrong, so you correct me if I say wrong. Each year we get something from the diocese called the Episcopal Bishop of Oregon Fund, that's for, I think, $30,000. And then another person, the bishop, got them to give us a donation of $35,000. So that means Laura, and that's for 3 years. So that means Laura is of no cost to us, which is something that we don't get that all the time. So kudos to Martin for making that happen. So,
Any more questions? Sally had something to say last? Okay, thank you, Sally. Thank you all for coming. I'll see you next week.
Gang, I'll reiterate the thanks to Warren. And thank you all for participating so robustly and for asking deep questions, so we don't have to ask deep questions during the annual meeting. Next week, Altar Guild members got held back by the storm. If anyone's available to help me wash up, I would be grateful for help. It'll be a 10-minute job with a few hands.